I'm Phil Rosen. I'm the Chief Market Strategist for ProCap Financial. We're watching Taking Stock.
All right, let's rock and roll down here on the trading floor of the New York Stock Exchange. 2 minutes to go into the closing bell, and bringing with it into this closing auction a fresh round of all-time highs once again, both for the S&P 500 as well as for the tech-heavy NASDAQ. At this hour, with about 90 seconds or so left to go in the trading day, the S&P expected to finish at session highs up in the green, a full percent. The Dow up looks like 0.6. The New York Stock Exchange Composite Index in positive territory, about 0.2%, with the small caps, the Russell 2000 up 0.7. The S&P, the benchmark index here on Wall Street, on track for its best month going back to November of 2023. As for the leading and lagging sectors in the S&P 500 for your Wednesday afternoon, technology, energy, telecom are the big winners on the day. Your S&P laggards, real estate, utilities, as well as industrials. That and much more sets the stage for a very busy edition of Taking Stock, to say the least. Welcome to the broadcast. I'm JD Durkin, down here on the trading floor of the NYSE. We got the team from Calix, ticker symbol CALX, set to do the honors. They'll also join us here on the broadcast in just a bit. All 7 of the so-called Magnificent 7 tech stocks in positive territory on the day. Alphabet shares the big winner out of that bunch, up 2%. Crypto majors also moving higher. We'll talk a lot more about Bitcoin's resurgence to 79,000 and much more. First, time for the closing bell. And there you have it. Another day for the history books. We're getting used to this type of thing, saying another round of all-time highs. Your final tail to tape on this Wednesday, April 22nd. The S&P 500 will finish up a full percent. The Dow 30 components having a strong showing, up 0.7. The NYSE Composite Index up 0.2%, and the small caps having a strong session, up 0.7% on the day as well. The oil benchmarks, West Texas and Brent crude, respectively, both moving up. That putting a little bit of downward pressure on airline stocks, specifically Frontier Airlines, the hardest hit out of that group, down 12%. A rise in software stocks continues for another day here on the street. Names like Salesforce, Adobe, MongoDB, all up quite a bit, and a little bit of a mini uptrend off of their recent lows from April 10th. And in the Dow, Boeing shares the big winner, up 4.5%. Apple and UNH up there as well. Your Dow laggards, IBM, 3M, as well as retail giant Nike. Let's bring in our first guest of the broadcast, Jacob Sonnenschein, longtime friend of ours here in the community. Jacob is markets reporter at Barron's. My man, it's nice to have you here. It's a busy, chaotic day down here on the floor, so we get you down here to see us in person next time. Why aren't markets reacting to the drumbeat of concerns, the geopolitical concerns out of Iran and the Middle East? Here we are, Jacob, another round of all-time highs.
Yeah, thanks again for having me, and looking forward next time to being in person for sure. With all the loved all that market noise over there. Here's what's going on. The equity market broadly has decided, and I think appropriately, that President Trump has initiated a conflict with Iran and has made clear that every time there's a question about the economy, basically every time oil gets high enough, and now Brent crude's at 100 again, peak is 112, that the equity market has decided Trump is going to walk things back as much as he can. And now it's not an easy mess to get out of, but he's doing his best, and it's not going to be, with oil at 100 right now, it's not going to get much worse from here, and it's not really going to cause a recession.
Jacob, we went from oversold to overbought in the S&P 500, basically at a historically quick pace. Have we now gone too far? Are we now too ahead of our skis for those who track the equity, given the fact that, as you just said, Brent's closing the session at 101?
Yeah, I think in terms of the way a stock and equity in the U.S. right now needs to be valued, we've overshot to the upside. I will say you have to always remember, I think we're in a bull market long term. I've thought that for several years. We've been in one. You have to remember, in bull markets, the market gets bought from brief dips and brief scares very quickly. And this overshooting to the upside is a very common feature of many bull markets. Now, the S&P 500 is now approaching, not quite, but approaching 22 times forward earnings. Historically high, especially with rates around 4%, kind of across the board-ish. 22 times forward earnings is fundamentally pretty high. I think it's not an unreasonable multiple, but you don't tend to go above 22 times, and that means you need earnings to keep getting better, for revisions to keep being pretty good over the next few months, and for earnings to grow over the next few years. As long as the economy expands, earnings are going to do that. But right now, at around 22 times forward earnings, I think the market is starting to get close to that level where it's overshooting to the upside in the near term.
Jacob, where are you seeing opportunities in healthcare?
Okay, I'm going to be really boring right now, but I like Eli Lilly. And I will be honest, there are some companies most people don't, talk much about. Stryker is one that I really like, medical devices. There's a whole swath of healthcare companies right now that are basically growing because of an aging population, basically have long-term secular growth because of an aging population. Stryker and Boston Scientific, they make things for surgeries. But I really like Eli Lilly, and we just published my piece on Lilly this morning. It just made another few billion. So this one was $3 billion acquisition in oncology, a privately held company. Over the last couple of years, it's probably accumulated $5 or $6 billion roughly worth of oncology purchases. And I think what Eli Lilly is doing is, number one, it's saying we're going to keep growing in GLP-1s, but we're going to protect ourselves from emerging competition by making sure that we can get in on what is a multi-$100 billion annual and growing oncology market.
All right, we'll have to leave it there. So you like Lilly, which had a strong session today, ticker symbol LLY, up 2% on the day. Jacob, come back and see us anytime. Jacob Shudenshine, longtime friend of ours here on the show, markets reporter at Barron's. My man, we'll see you again soon. Todd, you're going to head this way. We'll bring you the latest analyst numbers, if I can squeeze through. Pardon me, one and all. Thank you. The latest analyst calls, rather, that moved the tape today on Wall Street. After you, ma'am. All right, first up, we're going to talk Wells Fargo upgrading. Go ahead, let me let this group through, then we'll do this. Wells Fargo upgrading Airbnb to overweight, saying it sees new innovations in the quarters ahead. Airbnb up about 5% so far year to date. BMO initiating coverage on Toast, Visa, and MasterCard, all three of those companies with an outperform rating. BMO calling them core holdings, more insulated from AI disruption than narratives here on Wall Street may otherwise suggest. Finally, Roth initiating coverage on Cava as a buy, saying it has long-term confidence in the company, a 106 price target. Those pita chips are absolutely dangerous from Cava. I love them. We'll take a look at one notable that calls the New York Stock Exchange home before we toss to our next package. This is Twilio, TWLO. It's up 3.5% on the day. B of A giving it a pretty rare double upgrade from underperform to buy for the software giant, citing its potential as a backbone of future AI digital experiences. Lifting the price target to 190, it's up about 30% off these relative levels for upside potential. Shares up 4% from the start of the year. Twilio set to report quarterly results next Thursday, April 30th. The New York Stock Exchange's very own Ashley Mastronardi sat down with Chief Test Pilot Simon Davies of Vertical Aerospace. They discussed their new two-way transition flight milestone and much more. Take a look.
This past Thursday, shares of NYSE-listed Vertical Aerospace climbed by nearly 26%. That's after the company announced that it successfully completed a historic two-way piloted transition flight. Simon Davies was the chief test pilot on that flight, and he joins me now. Simon, welcome to NYSE Live.
Good afternoon, Ashley. Thanks for having me. Well, good morning in New York.
Good morning. And how significant is this moment for Vertical Aerospace's mission?
Well, we've done what we call transition flight of our electric vertical takeoff and landing aircraft for the first time. So it takes off like a helicopter, cruises like an aeroplane, lands like a helicopter again. We've done that end to end in one mission. And the reason that's important is because it's the hardest part of the physics of the whole business of making an eVTOL aircraft. So we've demonstrated the full capability. It's a massive de-risker on our path to certification and entry to service.
What were the biggest challenges that you faced ahead of the flight that you had to troubleshoot for?
So apart from the good old English weather, we faced a whole bunch of challenges. It's a difficult environment. It's pretty easy to hover. It's pretty easy to cruise like an aeroplane. The bit in the middle is really challenging dynamically. We've been saying for 2 years, unless you test at full scale, you're always going to have surprises at the end of your certification journey. So working through that transition regime has been a real challenge dynamically from complex aerodynamics. Having got that behind us, we're moving forward with real confidence now.
All right, and for viewers who are just learning about vertical aerospace, can you dive a little deeper into what two-way transition is?
Okay, so our aircraft that you can see in those wonderful pictures there, it has 8 propellers. They point upwards for takeoff and landing, so it takes off kind of like a big drone. Then as we go forwards to aeroplane mode to fly on the wing, the propellers tilt forwards gradually, and then we cruise like an aeroplane. So it's really efficient, cruises very efficiently, and then the reverse process happens to land vertically. It means we've got an efficient aeroplane that can take off and land, but without needing a runway.
And how does what you did on this flight make the concept of electric air taxis more possible?
So, as I said, it's the most difficult part. There are challenges involved across the board in delivering electric aviation and vertical takeoff and landing in particular at scale. This is the biggest possible milestone we could hit to de-risk certification. So there's still work to do to get a deliverable capability, but after the flight we flew last week, we're really in a much better place to deliver services for our passengers. We've had congratulations from around the world from all of our many customers on 4 different continents. It's a huge milestone for us.
And what types of routes are possible once vertical aerospace begins transporting customers?
So we have orders and options for about 1,500 aircraft from customers around the world, biggest which American Airlines plan to launch services primarily for their customers. So launch routes will probably be things like airport to city center, airport transfers between hubs, or maybe solving difficult journeys across bodies of water or between city pairs. So our customers tell us those short range journeys are often very high value, and we're all about saving people time. It's about time and efficiency and moving people around in new ways.
And Vertical Aerospace's Valo's path to certification is targeted for 2028. What will you and the team be working on between now and then to ensure everything stays on track?
So eVTOL, there are many players in this industry. eVTOL is all about delivery and execution. So we've got a really clear roadmap. Our CEO's laid out a roadmap. We're about 2 years in now for our delivery of the certified aircraft by the end of 2028, and with a roadmap to 2030. We're executing on that plan. It's about consistency of execution. And so transition's a big milestone out the way. We've got our final design review for the aircraft in the summer, and then we go on to produce the pre-production aircraft. It's just execution, execution, execution. We're showing we can deliver on that plan.
All right, thank you, Simon Davies, Vertical Aerospace's Chief Test Pilot, for joining us.
Thanks for having me.
Welcome back to the show. Rune Christensen joins us now. Rune is the co-founder of the Sky ecosystem. We're going to talk all about your new yield-generating stablecoin, the general space, and much more. Rune, grateful for your time. I want to first get your big picture crypto outlook on a backdrop that's got geopolitical war, instability, but also earnings season. What does all this mean for crypto?
Yeah, thanks for having me back. It was really cool to be there in person last time. And I mean, what I'm seeing in crypto generally is that while the markets are volatile, that's always been the case for crypto, there is absolutely this general interest from institutions that are very interested. They want to get involved with blockchain. They want to get involved with stablecoins in particular. It's a very hot topic amongst major institutions. And regardless of whether Bitcoin, ETH, and the other crypto coins are going up or down, basically every single day, right, we're just seeing increased institutional interest, right? I mean, in Sky, we already work with BlackRock, BNY Mellon, Janus Henderson, some of the largest traditional financial institutions that are participating in backing the collateral for USDS, which is Sky's yield-generating stablecoin product.
Why are about 90% of stablecoins currently sitting idle? And what do you feel Sky ecosystem most does to bridge that gap?
Yeah, so I mean, the stablecoin space is right now really dominated by what's called centralized stablecoins, right? So these are like assets like Tether, like USDC, that are issued by a single company. And for the most part, these don't pay any yield at all. So most of the money, most of the capital sitting in these stablecoins is just not earning a yield at all. And ultimately, I mean, so like I said, Sky is, we're backing USDS, which is the world's largest yield-generating stablecoin. And what we're seeing is actually that rather than, I mean, a lot of our users are basically coming from USDT, USDC. It's like larger institutions that are already holding these assets increasingly are getting comfortable with moving their money into the Sky savings rate with USDS from Sky, where they can get, right now it's 3.65% in return, which is like a decent return with a very heavy focus on risk management, which is why these institutions are trusting Sky. Right now, there's more than 11 billion USDS in circulation. And also, this is like one of the oldest projects in the whole blockchain industry, right? So Sky has a more than 7.5-year track record of keeping its stablecoin products totally stable with like no disruption of the stability for its users. So this is what's really built up, the interest from these institutions.
Yeah. All right, Rune Christensen, thanks for being back on the show. You're always welcome here to make the case. And next time we have you, we'll talk much more about stablecoins, how it matches up against the general TradFi conversation, and much more. Nice to have you, co-founder of the Sky ecosystem. All right, now it's time for a few fintech, crypto, and AI headlines for your Wednesday afternoon print. First up, Bitcoin up about 3% on the day, reclaiming 79,000 for the first time since early February. ETH up 3%, Solana at this hour up 2% as well. Next up, crypto-backed political groups. They are stockpiling nearly $180 million for the upcoming November midterm elections, positioning the industry as a major force once again, as it was in 2024, to shape the next wave of regulation in Washington. And finally, New York's Attorney General taking aim at Coinbase as well as Gemini, accusing those particular crypto exchanges of running illegal prediction markets as the regulatory battle over event betting continues to heat up. We'll be back with a lot more Taking Stock live from the trading floor of the big board right after this. Welcome back to the broadcast. We are currently live on the trading floor of the New York Stock Exchange, and Michael Vainin joins me now. He is the CEO at Calix, right off of the Bell podium. It's great to have you, and thanks for taking a few extra minutes for the broadcast today.
Really appreciate it. Thanks for having us.
What was the experience like up there, bringing about a close to the markets, and not just any day, another day of all-time highs. You guys were up there. What was it like?
You know, this is the history of capitalism. So to actually be on the floor, it's an incredible experience, that's for sure. And we're proud to be listed here on the stock exchange and working really closely for our investors. So it's great. We also had our investor day here, so we had all the investors on with us today, which is fantastic as we walk through the next generation of our company. We announced also that we're bringing out everything that we're doing on AI. So it's a great opportunity.
I'll ask you a little bit more about that. First and foremost, talk to me a little bit of an introduction to what the company is all about for anyone a bit unfamiliar. And what were some of those top line priorities for Investor Day here today?
So we're a platform company that helps broadband providers completely transform their business away from an undifferentiated product to something that builds experiences for consumers, small business, MDUs, all that market, and allows them to compete.
That's awesome. And of course, you mentioned artificial intelligence. I wouldn't be doing my job.
Yes.
I didn't ask you some of the ways you're leveraging AI, new exciting technology, limitless opportunities seemingly.
Yes.
What does it look like for Calix?
So 2.5 years ago, we started to see that AI can now be done in a trusted and private way. So we started to invest in actually take our second generation platform and spend the last 2.5 years putting artificial intelligence into everything that we do. And it actually finished out on March 24th or 26th. So we just got that done. We moved all of our customers onto it. And what it means is that now as we look at what they do from a workload every single day, we can actually put the AI in place and transform their business. So for us and our customers, regardless of size, it's actually AI is unbounded if you have insights into what they do every day and how you can optimize it on a go forward.
You mentioned your platform. Let me ask you a little bit more about Calix One. What is it all about? What does it mean for your relationship with those customers today?
So what we do is we run all elements of their business, from the call center to the field service to marketing, and then how they run their networks and operations. And so what Calix One helps us do is look at what they do every single day and then apply automation and AI in different ways than they did before. And so we really talk about what we call human-centric AI, which is we're really partnering with our customers, their employees, and identifying ways that we can help them change the way they operate while, as opposed to just like everybody's doing today, saying, hey, I'm going to eliminate 40% of my employees. We're actually instead saying, how do you actually double, triple revenue without adding headcount, which investors like just as much. And so it's a different approach, but something that, with a great partnership with our customers who care about their communities, that's something that's important to them.
And that's the key word here, partnerships, whether it's Google Cloud or anyone else. How are these relationships coming about?
So Google is fantastic. So we look at in our business as Amazon being a big competitor to our customers. If you look at Starlink and what Amazon's doing and the services that they're offering, our customers are the broadband providers, so they're the ones in the community. So we migrated over to Google because actually Google, if you look at where they've gone over the last 2 years, they've gone from a position where they were behind in the cloud to now leading. Gemini by far is the best out there right now, and so we partner with them around how do we help these customers get access to that technology, democratize access, so regardless of size, you can be as good as a small company or a big company.
Michael Vainin, congratulations on all the success. Thanks a lot for joining us down here on the floor and on the show. It's nice to have you. Come back anytime. Safe travels back home. Don't go anywhere. A lot more Taking Stock live from the big board coming up after this.
Right.
Right. All right, welcome back. Time now for the latest headlines in the world of startups, raises, and rounds for your Wednesday afternoon. First up, SpaceX making a massive artificial intelligence push, locking in an option to buy coding startup Cursor for $60 billion as it scales up to take on OpenAI as well as Anthropic. Next up, Revolut aiming for a massive $150 to $200 billion IPO valuation. My goodness, the numbers just get bigger and bigger. Expected to happen in the next couple years as the neobank scales global expansion. And finally, AI research lab Neocognition set to raise $40 million to build a new class of AI agents aiming to fix reliability challenges in today's models. Now, Money 2020's very own Scarlett Sieber is back with a whole new edition of Jargon Translator. It's where she puts complicated, wonky fintech terminology into language that anyone can understand. Take a look.
I'm Scarlett Sieber from Money 2020, and this is Jargon Translator, where intimidating finance terms get translated into something that actually makes sense without dumbing it down. Today's term is negative carry, which sounds bad because honestly, it usually is. Negative carry happens when the thing you're holding costs more to maintain than it earns. In plain English, you're paying money just to keep owning something. Imagine buying a rental property where the rent doesn't cover the mortgage, taxes, maintenance, and insurance every month. You're writing a check just to keep the asset. That would be negative carry. In finance, it shows up everywhere. Banks holding low yield bonds while funding costs rise, investors borrowing money at higher rates to buy assets that pay less. Hedging strategies that quietly bleed cash while offering protection. Here's the part people forget though. Sometimes negative carry is intentional. Investors tolerate it because they believe the asset will be worth more later. They're choosing short-term pain for the potential long-term gain. It's a patient strategy with a stopwatch running. The dangers appear when circumstances change, rates move, liquidity tightens, timelines collapse. What was once temporary discomfort turns into a structural problem. Negative carry doesn't cause trouble when markets are calm. It becomes very visible when stress hits and everyone suddenly asks, why are we paying to hold this? Negative carry is lost by design until conditions stop cooperating. And with that, that is your jargon translated. If there's a finance term you keep hearing and want to hear the real story around it, put it in the comments. It just might make that cut. In the meantime, back over to you.
At this hour, Tesla shares up about 3% after reporting quarterly results a few moments ago. Still going through the numbers, but the company with a beat on earnings, but a downside miss on revenue. Tomorrow morning before the bell, the latest quarterly results from names like Lockheed Martin, American Airlines, American Express, as well as Blackstone. And this time tomorrow after the bell, the latest results from Intel. That'll do it for your Wednesday edition of Taking Stock. Thank you for watching. We will see you again tomorrow.